over the last 6 months, Bitcoin is down maybe about 8%. So all of the gains were in the first 2 months. So if you didn't buy it early in January, you don't have any gains. In fact, the vast majority of people who bought Bitcoin this year, either directly or through an ETF, are losing money. On the other hand, hardly anybody who bought gold is losing money. Over the past 6 months, while Bitcoin is down 8%, gold is up 23%. That is a massive divergence. Nobody's talking about it. Nobody cares about it, but I'm talking about it because I think this is an indication that the momentum has flipped. It's no longer that Bitcoin is gaining on gold.
Historical data indicates that September has often been a challenging month for Bitcoin. For example, in September 2019, Bitcoin's value plummeted by 13.91%, and in 2014, it fell by 19.31%. These historical trends raise concerns about Bitcoin's short-term future. While Bitcoin falters, central banks are rushing to gold. In the first half of 2024, they bought a record 483 tons of this precious metal, surpassing the previous record of 2023. Seasoned American stockbroker Peter Schiff underscores that while gold reaches new highs, Bitcoin, which he calls fool's gold, has lost momentum, dropping 8% in the past 6 months. However, Peter contrasts this with gold's 23% gain, highlighting the widening gap between the two assets. Bitcoin experienced a momentary recovery in August, but concluded the month with an 8.74% decline. Gold prices are soaring, and experts predict this upward trend will continue. As the Federal Reserve gears up for its next meeting, some experts are betting that gold could hit a record-breaking $3,000 an ounce within the next 12 months. According to Peter Schiff, the market cap of gold has significantly increased, further widening the gap between gold and Bitcoin. He argues that Bitcoin overtaking gold's market cap is now more unrealistic than ever. Imagining a strategic move, Schiff predicts the Harris-Biden administration could sell off U.S. Bitcoin holdings to weaken Trump supporters financially, ahead of a potential Trump presidency. In his speech on July 27th, Trump pledged to keep 100% of all the Bitcoin the U.S. government currently holds or acquires in the future if he is elected. Even if Trump takes office, Schiff suggests he won't endorse Bitcoin, still viewing it as a scam with no intrinsic value. Now we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
You know, while gold continues to set new record highs, a fool's gold, aka Bitcoin, is continuing to be under pressure. In fact, as I am recording this podcast live on Sunday night, Bitcoin is 57,300. Now, I know the Bitcoiners like to talk about the big gains that Bitcoin has had so far in 2024. And yes, it is up. It's probably up more than the stock market. But all of those gains happened in the first 2 months, January and February. And it was all because of the launch of the 11 Bitcoin ETFs, actually 10 new ones. And then you had Grayscale convert to an ETF. But we have now 11 US listed spot Bitcoin ETFs that we didn't have last year. And so there was a lot of hype, right, surrounding that. But over the last 6 months, Bitcoin is down maybe about 8%. So all of the gains were in the first 2 months. So if you didn't buy it early in January, you don't have any gains. In fact, the vast majority of people who bought Bitcoin this year, either directly or through an ETF, are losing money. On the other hand, hardly anybody who bought gold is losing money. Over the past 6 months, while Bitcoin is down 8%, gold is up 23%. That is a massive divergence. Nobody's talking about it. Nobody cares about it, but I'm talking about it because I think this is an indication that the momentum has flipped. It's no longer that Bitcoin is gaining on gold. Bitcoin is now losing. And in fact, on market cap, the gain in the gold market cap is massive because gold market cap is already maybe 10 times the size of Bitcoin's. And that market cap has increased by 23% as Bitcoin's market cap has dropped by 8%. So the idea that Bitcoin is going to one day overtake gold or somehow get gold's market cap is even more far-fetched now than it was, 6 months ago, given how much bigger gold's market cap is right now in relation to Bitcoin. And again, if all of this buying and all of this hype couldn't lift Bitcoin to new highs, because it never made a new high in terms of gold. I mean, not even close. What will? Nothing. And remember, I still think that the Harris-Biden administration is going to unload all the Bitcoin that the U.S. government owns before the next, before Trump becomes president, if in fact Trump wins the election. They're going to dump that Bitcoin. And in fact, one of the reasons that they may sell that Bitcoin is just to burn all the Bitcoin guys who are supporting Trump, right? They're giving the Trump administration a lot of money. Well, how do you stop that? Well, crash Bitcoin, sell your Bitcoin, and that'll hit the pockets of the Bitcoin whales that are now donating money to the Trump campaign. So if you want to try to hit those donors where it hurts, you sell your Bitcoin. So all that talk about the U.S. government buying Bitcoin, they're actually going to be selling Bitcoin. And I don't believe, even if Donald Trump wins, and I hope he does win, but even if he does win, I don't think he's going to be buying Bitcoin, even though he's got Robert Kennedy endorsing him. I don't think there's going to be a Bitcoin reserve. All Donald Trump promised was not to sell the Bitcoin that the U.S. government has. And if the Biden administration already sells them before he comes to office, then there's nothing for him to do. He's not going to go out and buy Bitcoin. Remember, Donald Trump, when he was president, correctly said Bitcoin is a fraud, it's a scam, it has no real value. And I don't believe that he's changed his mind. I do believe that he's seen that there is a lot of money, a lot of investors that are there. And so it's votes, it's campaign donations. So I think he's, obviously trying to play to that audience.
Gold stocks dipped in morning trade on the ASX following a price pullback on Friday. Gold miners made up 7 of the 10 worst performing stocks across the ASX 200. In Peter Schiff's analysis, the recent economic data misinterpretation caused a minor pullback in gold, though it stayed above $2,500. Regarding the mining industry, he notes that gold stock traders are extremely nervous. He also points out Newmont Mining's upgrade to a buy rating despite its limited price target of just 10% above the current level. However, Schiff criticizes the upgrade, arguing that Newmont's potential is far greater than the modest target suggested. On Thursday, Newmont Mining Corporate, the world's leading gold producer, upgraded its rating by Argus from hold to buy, with a new price target of $58. The upgrade comes as Newmont has expanded its operations through a recent acquisition, positioning itself to capitalize on the current economic climate. Based on his observation, Peter explains that the dollar's slight rebound this week is due to the market's misinterpretation of economic data, leading traders to believe the Fed might cut rates less wrongly. Let's get back to the interview.
What I really want to focus on for today is the economic data that came out during the week. And the way the markets have completely misinterpreted the data. Because if you look at the reaction and the media spin on this data, you would think that we got good news, but we actually got nothing but bad news. And because of the misperception, we did have a pullback in the price of gold, although minimal. In fact, gold closed over 2,500. So the pullback was about maybe 1/3 of 1% from where we were a week ago. But despite that very minor decline in the price of gold, gold stocks got hit pretty hard. The GDX was almost down 2%, and the GDXJ was almost down 4% on a nothing move down. That's how nervous these gold stock traders are. I mean, there's no optimism. I mean, not even close to euphoria. They are very skeptical. And the minute they see the price of gold go down, even slightly, they're like dumping their gold stocks. And the reason that the GDX wasn't down more was because Newmont kept hitting new 52-week highs, because somebody finally upgraded Newmont to a buy. I forget the firm that upgraded it. But I talked earlier this year when Newmont got downgraded to a sell, and I was buying more Newmont. Even though I have a huge position in Newmont, I had to buy that downgrade because I thought it was so ridiculous. So finally it got upgraded to a buy. But I thought the interesting part about the upgrade was the price target was only about 10% above the current price, which is ridiculous. I mean, why even bother to buy it if you think you only got 10% upside? I mean, they waited for the stock to move up dramatically. I don't know what is 60, 80% from the lows to say buy it for the next 10%. I mean, the price target is ridiculously low compared to where I think it's going to go. But I think Newmont getting that upgrade, and it kept hitting new 52-week highs, that's what propped up the GDX. Newmont's not in the GDXJ, which is why it was down closer to 4%. But neither of these indexes should have been down. They should have been up. It doesn't matter that gold prices are down. They're still above 2,500. These gold stocks are priced for gold to be much lower than 2,500 because none of the gold stock investors even believe that gold could get to 2,500. And that's why they think it's not going to stay at 2,500. They're right about that because it's going much higher than 2,500. Also, the dollar index bounced back a little bit on the week, again, based on the misinterpretation of the data that came out during the week. I think the traders looked at this data as meaning, well, maybe the Fed is not going to cut rates as much as we thought. I mean, it's pretty much baked in the cake. They're going to cut in September, which, this is the last day, I think, of August. But so the September meeting is coming up. And I think there's no way the Fed's not going to cut. But I think what the markets were looking at is the cuts that come later. And I think the interpretation, the misinterpretation of the economic data that came out this week was that, the economy is stronger, and so maybe we won't get as many rate cuts. And I think that's what boosted the dollar. That's what, weighed on gold. But if you actually understand the economic data, it was all bad. It's all a weak economy with higher inflation. It's stagflation. It's bad economic news. But so many traders just have no understanding of basic economics. And so that's why in the short run, the markets do the opposite maybe of what they should be doing. But in the long run, the economic fundamentals are going to be borne out, and the markets are going to do what they should do. And that's going to confound the people who don't understand the economics.
Still, with 2 quarters left in the year, gold's 20% surge isn't going unnoticed, and many expect this number to only grow. Peter Schiff's criticism highlights the ongoing challenges Bitcoin faces in retaining its allure. As gold continues outperforming Bitcoin, the cryptocurrency is expected to endure a tough September based on historical data. How do you anticipate the evolving economic landscape will impact your investment strategies, particularly between gold and Bitcoin? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.